we should be good. So,
yeah. All right. How's it going, everybody? Welcome. January 15th, 2025. We've got a fantastic, looking forward to this interview with Scott. It goes by Scotland with the L as a 1 on Twitter, X, whatever you want to call it, man. Pleasure to have you with us. Looking forward to learning from you and hearing about your stuff. You just want to introduce yourself, tell us how you got started, what you like to do.
Well, thanks for the intro, Patrick. And yeah, I guess I wasn't fast enough on Twitter to get the L, so I had to improvise there. Yeah, I mean, I've a trader. I've been trading really since I was in college with a couple of breaks that I've had to relearn. But not to date myself too much, but I went to I started getting involved in the market right before 1998, 99. There's markets that are just these incredible things where even college kids that were dumb and broke could make quite a bit of money just by buying shitty little breakouts in stocks that kind of sub $10 ones. I had no concept of money management or anything like that, but if it made a new high, they're gapping up the next day, every day. I mean, even 2020, 2021, it gives glimpses of what that environment was, where stocks would just take off, like crazy. But, in 99, 2000, it was every day that was happening. And I don't know how to, it was just crazy, that you'd put a .com behind your name and your stock, all of a sudden it would go up $50. It was wild. So after, I got really interested in and, got relatively good at, putting a watch list together and buying these stocks as they, would break through a resistance level. And a lot of times I would sell on the gap the next morning. I guess the best thing that I had going for me is I took a job as in, learning how to options trade in Chicago, firm that, would be at the Chicago Board of Options Exchange. So one of the conditions was that we're not allowed to trade our own account. So I had all the money built up that I was lucky enough not to lose, for that prohibition. Saw some really cool stuff there. I mean, we saw the accounting scandals with Tyco and Enron blow up. We saw WorldCom. Saw some wild days with after September 11th, we get these missions, we had on our screen, we had offices in New York that, making sure everyone was okay as it's happening. But then, I don't know, are we a threat? Are we a target too? So they evacuated all the buildings and markets were shut for, as were probably the longest since wartime had ever happened. But, prepping for that, we saw the markets, preparing to update our volatility models because we knew it was just going to go nuts. And it did, but I guess the downside of that market is that it eventually the music ended, and then around 2001 the market kind of crashed, dried up, and the .com bust, big boom, became a bust, and they let the program go. So I decided we'll move on to other things, get involved in. But trading is kind of a jealous mistress, if you will, and it always brings you back, and that was kind of my experience. But unfortunately, I learned that the market's no longer traded the same way, going from fractions to decimals. But more importantly, the breakouts that I had been accustomed to trading and working no longer work. It was more, you trade a breakout and it gets you top ticked it, and you're underwater and can't make them anything. So I had to try to relearn how to trade, and went through probably the whole cycle that most people go through, where you get, they call it style drift, right? So you read a book on trend trading. I'm like, oh, I'm going to be this trend trader because it's the guy that was it Patrick Henry that bought the Boston Red Sox, and big trend traders, and there's the Koval methods with all that, and realized that was not my personality at all. Then the insane short sided day trade. I thought, that could be okay on that, but I don't know. I guess I never learned that. It didn't really jive for my system either. And so eventually you had to kind of find something that fits your personality. Ultimately, I guess now I'm probably mostly a swing trader. I'll take a position, as long as it's going. I can be in and out of a position, pretty quickly if it hits targets, if it doesn't. But I'm also, if it's really working, I'm able to hold a position for months or longer. And frankly, I've got Spotify. That was my first trade. I was just looking back. That was my first trade last year, and I'm still holding it. So
Nice. Nice.
Yeah.
Right away, based on the history that that you've experienced in the market, is in those moments, like even back in dot com bubble, or even post or to 9/11, do you know it's kind of like a impactful moment at the time, or are you just kind of trying to just take it one day at a time and enjoy it while it's here, or in the case of 9/11, just kind of get through?
Well, yeah, 9/11 you knew was an impactful moment, and that was changing. But like the average, no, I mean, I didn't know that it was, the trading conditions were abnormal, per se. I thought this is kind of stuff that happens. I didn't, really, because it kind of goes from a slow boil, and I had stocks that were picking, and they didn't do it that much at first, but I mean, my big trades back then were like I'd E-Trade, and that went from $20 to 500, or Night Trading Company, which was one of these market makers that was going to be like getting a lot of the order flow from the online trading that we were seeing. It was going from paper, and so they slowly worked up, and then they start hitting more and more. It was kind of like in 2021, 2020. Like, I mean, I think a lot of people probably that just started trading in that didn't realize how nuts and abnormal this, that they think this is, the music's never going to stop, or that there's another opportunity. And then when the market sells off, there's other opportunities, sure, but the ranges aren't big, and if you're trying to apply the same strategy. And I mean, I've seen so many bad habits online, is it, where you're buying out of the money 0-day expirations, and people are getting hammered, blowing out such. But I don't know.
Yeah.
I mean, I think I recognize that 2020, 2021 were abnormal, having gone through a little bit of that with the internet bomb or bubble and bust.
Another on the what was it like for you in 2022, and then kind of coming out of that into the early to mid parts of 2023?
Yeah, I mean, 2020, I kind of knew that the music was, going to stop. So I actually, I cut way back on the trading, and then I drew down my account. I took a lot out, and, kind of just, I don't know, found myself, found other interests. It's not that I try to trade here and there, but it wasn't like I was as active. I mean, I was looking, I cut my, I probably did as many trades that whole year as I might do in a month.
Okay.
So just you kind of, like, I mean, we were just talking about somebody that, bought a van and traveled, right? Before we got in, it was kind of like I hit kind of that, thing. Let's look at some other interest and stuff. And, I wasn't really looking at the market every day and stuff. It just kind of knew that, if you're watching a screen, you're looking at it every day, you're going to trade,
Yeah, if you're at the barbershop, you're gonna get your haircut.
yeah.
Right.
Right. You do something stupid. So I was able to cut that off, and then, started, kind of easing, slow. It felt like at the, going into this past year, it was changing a little bit, right? You started seeing some strengths, and it was the consolidations that we saw that, and, to be honest, like, I took some trade, like Spotify, and that's worked out really, really well. But it was really this past year started off really steady for me. It wasn't like, I just didn't do anything stupid. I just kind of, wasn't, it wasn't like fourth quarter, which was nuts, but it was more just kind of gradual, don't take any big losses. And, the gains started piling up a little bit. And, by the end of third quarter, I was in a really good position.
When I mean, even right up to the fourth quarter, because yeah, I mean, there was I would say some reminiscence of 2020 with the or 2021 2020 type market with quantum computing names, or some of these bad names kind of coming back. Do you did you dabble in some of those, like with a a nice cushion of year to date gains? Do you kind of get a little aggressive?
The one I did get in that QMCO, and this is fourth quarter, and it's like one of my, I think December. The chart looks so skewed right now, but I've been watching it, and I knew like a 20 was kind of a resistance point for it. And so that second time that it came through, I bought it. And I'm like, well, okay, like if it runs, it's gonna go. And I thought, okay, it got up 30 the first time it went there, so that's where I'm gonna hit I think I can hit that. So I'll put a limit order there. And I sold my stake for a 50% gain and missed it going to 90, I guess. So
Yeah, man.
yeah. But
I was trading the RGTI one, and
yeah, I didn't really trade RGTI. I did Ionic a bit. I did, um, from I don't know 35 or so to 42. So it wasn't like a major thing. I just never trusted those stocks. Kind of felt like they're when you see them kind of just on a frozen rope type of thing. Without the I mean, I'm not a big, let's find, look at the fundamentals and let's try to analyze this. There was clearly a trend that was going, but I mean, I kind of suspected there was always going to be a point where we saw what we just did a couple last week, right? Where you get that massive gap down.
Yeah, it was bound to happen eventually, whether it was Jensen's comments or an
Yeah,
earnings report or something.
it was gonna happen, right? I mean, it's but in a rough market environment, that's the first stuff that goes.
Yeah. I know it kind of this, the question about that, I know it kind of depends on, maybe market conditions a little bit and kind of what's working, but what kind of stocks do you generally go for? Are you more of like leadership stocks like your Tesla, AVGO, GEV, or you going for thematic names or
Well, yeah, that's a good question. So one of the things I did, to actually learn how to, trade for real after I had to, reinvent that is going in and doing like a deep dives. And one of the areas that I studied was like, so we had, I forgot what year Twilio came out as an IPO. There, you
like
know,
18?
yeah, it was like 15,
Okay.
no, 16. There was another, and Twilio had a fantastic run right out of the IPO too, but there was another stock, Acacia, I think it's since been acquired, that wound up going, 20 to like 120 in a couple months. And, I caught a small piece of that, but I'm like, I'm never missing one of these again. And there was a guy in one of the groups I was trading with, and he just absolutely nailed it. I had Twilio, and I did pretty well with Twilio at the same time, but it was kind of the B, where the other one was the A,
Yeah.
at the time. And I'm like, I'm never going to miss one of these again. So I decided to go through. Let's figure out what he had showed examples of his IPO trades in Steak Shake and some of these other names that had just really launched. I'm like, well, there's no fundamentals behind a lot of these. They're over. Why are these going up? And the stats are that 90% of them trade below the IPO price. So is this actually an edge? Is this tradable? So I wound up going through every single IPO, every chart of an IPO for like I looked at like a 6-year period, went through every single one, and that gave me enough confidence, conviction to say, well, there are certain things I can take away from an IPO, how it trades. I mean, you think about it, there's an insider lockout, so there's no real selling pressure. The institutions don't own it, so so that's why you're not getting these a stock that gets overbought and all of a sudden it gets institutions are taking profit or whatever because they don't own them, and the insiders can't take profits because they're locked out for a period. So you see these kind of like abnormal moves outside from the what I call them the infant run.
Mm.
I mean, I don't know how much you want to get me to get in, but the early phases of a stock, it's they can be like an infant. They can be up and down, and they can run pretty hard, but they'll inevitably crash. So I treat the early phase of a stock different than I would do after it, like Twilio on your screen, it resets, and once that stock resets, then it's ready for a more of a big run. So if we can take out kind of that first the first run. And one of the things I look for is during the infant run, did it make a display of power? Okay. Yeah, ALAB, right? And I was trading actually, so the ALAB, you've got it from the onset, and it makes that initial push, and then it resets over 6 months, and then and how so then you see, so that's a stock that I'm certainly interested in. And then it gets this display of power, makes a new high in November or so.
Yeah.
And, that's telling you that's got all the signs that, it pushes above its IPO, but this is an IPO that has shown interest. And so this is going to be a powerful. Reddit is, another one
Yeah.
that I've been very active in Reddit.
Yeah.
It had a big push from the IPO, and then kind of you know, came around and, now when you get that big earnings gap, it's kind of the game on signal at that point.
Yeah. Hey, if you want to share your screen, you can too. If you want to go over these, I don't care. Your call on that. Have you read what's her Eve Bobich? I don't know how to pronounce her
Yeah,
name.
I have the life cycle stock. Yeah.
Yeah.
And yeah, so they've got all this great, and it's a great resource, for IPOs. I think, I may their quote unquote trading strategy or best approach and the rules, they did a little bit of form fitting, like, because what would have kept us in Amazon or something like that.
Mhm.
And you can take the stats just because the stock is going to trade below its IPO price or whatever in a year does not mean it's not a good setup for a swing trade. And so that I'm probably more nimble than they're taking just the best of the best and like, oh, here's how you find the Googles, the Amazons, and how do you hold that. And I've traded, in all honesty, a lot of crap stocks that are IPOs, but just because like, I mean, you can pull up like Robinhood from its first IPO, right? I
Yeah.
mean, like, it's a good example, and it certainly wasn't ready. But I mean, look at it; thing went nuts, But and that's how I was pulling it out of from that very first couple days,
Right.
because if you push for that kind of that first day IPO high, you can almost treat it like an earnings gap,
Yep.
sell into it. I knew it's not going to run beyond that, so you treat it like a blow off top and then let it reset. Whereas they would never touch that trade, on the life cycle.
Oh, these are fun. Hey man, you're talking right, man. I love trading these IPOs. A Lab was one of the best. I mean,
Yeah.
I'm sure for most people who are watching the market and kind of involved in that. And then these secondary bases after they
Yeah.
base out, at that point. So I know you mentioned that you're not really much of a fundamentals guy. Is that something that you set some interest, or where would you kind of rank that?
Where I guess my assessment is I'm not as smart as the people that are really good at fundamentals and have the research departments like the hedge funds do, right? So rather than, I know it matters. I'm not going to be one of these people that, it's just pure chart. But my thought is I'm just going to I'm going to cheat on their exams. I mean,
Mhm.
look at a hood right there where you're starting to see the volume pop up. That's your institutional buying and trading this base.
Mhm.
I don't need to know. I mean, somebody has done the research and they're putting, millions and millions of dollars on those, with that volume. So that matters more to me than, a earnings estimate or something, from an analyst or, getting into it. I mean, it's who's actually betting on this. And you can see that they're coming in, there's a gap, at about to $10 and they're holding that gaps, and then if you look at the day where it broke that range, about they reversed it, that was the bottom. In So I think that's how I kind of view earnings and the fundamentals is like, you can just copy the smart guys.
Yeah, I agree. I agree completely. I often say the same thing. What's the phrase? I know nothing is what kind of what I say. Like I'm a little satirical, but making a thesis like, oh, this and that, and then I mean, what the hell do
Yeah.
I know? Right?
I'll still do a first cut, and it's not like because you can have ton volume and like a crappy biotech or something like that, and it's not doesn't mean that they're pouring in. I mean, you can get wild stuff, and that's not necessarily just a buy signal, but so you're still looking at kind of what I'd call institutional names. Does it have a consistent volume that institutions are actually active in it? Are they being able to get in and out of positions? That's what you want to see. If you don't want something too thin, if you're trading a stock that's got a float of 8 million, it's going to whip around. One person could, and move that thing 50%.
Speaking of, what was QMCO? Yeah, this thing was tiny. This was probably one of the thinnest names that I've seen.
You put 66 million.
That's what it says right now, but I don't know if that's true.
Yeah,
'Cause this says
I don't know either. I mean, I know it had reverse floats and all that kind of stuff, and that's I'm. And honestly, this is why I didn't catch that move up to 90 or whatever it went up to. Is I'm so scared of those names when I get in them, and it's not like I obviously I never trade them. But I'm certainly not betting my year on that. Um, but like if I can get in, I can get a big gain in a day or two. I don't want to overstay my welcome here.
Yeah, exactly. It's maybe not change it up a little bit, but I currently like right now, or not right now, in the past, throughout each kind of stage or journey, who have been some maybe trading inspirations. I know you mentioned Stockbee's room, or yeah, who have been some trading inspirations, or people that you look up to, or
Sure, there's so many. I guess the first one is some of the books that you read along the way, and Jesse Livermore. I've read that book, Reminiscences of a Stockbroker. Some more times than I can count because I feel like the first time you read it, it's an interesting story. Um, then you read kind of like you're in awe of the money, but then you kind of start seeing the kind of the emotional aspect is read it multiple times. Um, so I get that. But as far as mentors or people that I've influenced, I mean, or I know even in the Yahoo chat days, when I was trading in college, there was a guy, Trader Mike, that I had learned some of these breakout things, but then moved on. Stockbee is definitely an influence, and I was a member of that for a number of years. One of the things I really liked about Stockbee it wasn't just here's how it is. It's like, okay, here's this conventional wisdom. Is it true? It does relative, for example, it does relative strength really outperform if whether if the market comes off correction. Is that really where you want to go? And his response if people would say that is like, well, have you done the research? Have you looked at it? And kind of encouraged to kind of do that deep dive. And that's probably why I went into such detail in the IPOs. With that because people have assumptions about never buy this or don't do that, and make sure you've kind of come to your own conclusions. I've got a pretty big circle on Twitter of people that I follow and interact with, and they're great. I know you've had Oliver Kellon. He's great. PBA, another one of my trading buddies, Modified Darwin Box. But yeah, I mean, there's just so many. You got to find somebody that's kind of you resonate with his style. And just been thinking through that. So
was Christian Kalamagi in Stockbee when you were in there?
he was, and so this is when he was still poor. He's only worth a couple. He's probably worth less than $1 million at that time, right? But one of the things that he would show his screenshots of his notebooks and stuff, and what struck me is he had every single breakout, every single spike. He worked harder than and I thought I was putting in a lot of time in doing this stuff, but he was 10x anybody, and he worked so hard at that. And I think that's it's easy to say, well, here's his setups, and and he's become obviously legendary status. But people don't realize how much work he was putting in and day out. He had his Evernotes or whatever he was using his program, but he had done all the data, he had done all the work.
Do you is that what it takes?
To have that kind of a conviction, sure. I mean, I certainly haven't had the ability to turn in a few $1,000s into over 100 million like he has, but he certainly had the conviction because he developed it, and he has been tremendously successful. I mean, yeah, I've seen it, I've heard him on some of these other podcasts. Maybe it was Chat with Traders, and he talked about when he was really I mean, he had I think a sub 20% win rate. I mean, you have to have the extreme conviction in your setup that it's going to work to take that many losses, and he takes them so quickly. In some market environments.
Yeah, I mean, just the power of risk to reward to be, to make that much money with, 20% win rate.
He's doing these on a 1 minute chart, these open and range breakouts, and and then if it works, he's holding it, is crazy. but yeah, I mean, the conviction that he had, the work that he put in is, really an example. And
Man, I really loved what you said about Stockbeach Room, kind of the approach to all the conventional trading wisdom of okay, let's put this on the table, and let's figure it out. Do breakouts work? Are breakouts not working right now, or what environments are they not working out? Why is the 50 SMA impactful, or something like this?
or is it impactful?
Is it? Yeah,
That's another one.
you're right.
Um, Yeah, and it was a great environment. People would come up with ideas, and there was a couple people that older, more experienced, traders at the time. They'd poke holes in all your ideas, or they'd
Mhm.
force you to get better, and kind of iron sharpens iron, and that's how I came up with a lot of my some of the setups that I use. Even today, we kind of worked it out, and have you tried this or what's and if I haven't thought about something like, oh, I guess I need to address for this consideration or that consideration. And there's a lot of things I tried. Is it just if I just do a pure weekly breakout, is that going to work? If I got kind of sick of trading breakouts, so I try to figure out, okay, what's the best way to get in it? Do you buy just a return to a moving average or some type of thing, and what's the kind of the best way to come up with that? So I guess that's a long way of introducing one of the setups I use, which is what I call the slingshot, which I designed kind of as a pullback, setup in one of those um, sessions or over a period of days or weeks. And what I was looking for is, okay, I don't like getting breakouts because you see those wicks on those charts, right?
Yeah.
I used to be the guy that bought those, but now I don't like to buy those. So I'm thinking, okay, how do we get in? How do we get into a stock? How do you know it's going to stop pulling back? And started trying different moving averages, certain things but it needed to be repeatable. Any setup, you need to be able to define it. You need to be able to scan for it. You need to do it. So ultimately, I settled on the highs of the four moving or the four EMA. So of the highs, not just the regular one. And the thought process was essentially that if a stock can take out its highs, you're signaling that the downside momentum is waning, or a stock is more powerful. So I see you put the email on there.
Just trying to set it up. Yeah, so I guess walk us through this, I suppose, if that's cool.
Yeah. So why don't I don't know. I can pick up any stock here we want to do, but yeah. So you've got the average of the last. Switch it onto your screen to the highs. Yeah.
Okay.
Okay. And so and I've got this color bar coded on my chart so you can see it. Maybe if you want, I can.
Yeah, here. Go ahead.
Share a screen here.
Load it up and learn the slingshot.
All right, we got it. All right. So let's just take I don't know, Shake Shack, for example. And let's see if I don't even have a position. I haven't seen it for a while, but so we've got these periods here where we've got these, pullbacks. Let's zoom in. Okay. So here's how I might look at something like this. Okay. We have an earnings gap in February. If I've got a setup for that, but, so we want to see a power on an earnings gap. Okay. So it comes in and then it kind of fades, and now you start the pullback, right? And you can either buy in this breakout where you're going to get wicked, or you wait for it, kind of a less, I guess, a less contested entry. So, but you're down, essentially 1, 2, 3, 4, and they're not really having momentum. So I'm looking for when would I buy this? I want to be sure that this downward momentum that it had for basically a month would be over. And so I'm looking where it crosses the green line. Can you see it on my chart? Okay.
Yep.
So where it would cross this green line, which is my slingshot line, and I've got a color coded. So you'd be buying, on what day is it? April 23rd. Where it finally is able to overcome the highs of the past 4 days and signal your entry. And it became a pretty good entry from I guess 98 to whatever in like 110. And that, that's not a example I had planned or anything, just finding on, one on the screen. So that's kind of what I'm looking at, and it works. Google looks a little bit choppy for that, but ideally you want to do it kind of that first pullback after like an earnings gap is great. See where we at. I know this one had an earnings gap. Yeah, so I mean, you have it pull back, and then you would be, 31, and pull it in, and then you get gap down because the market sucks sometimes, right? But that's it's kind of the way to get in as it clears the downside momentum. The upward momentum's coming back, so that's one of the setups that I really look for.
One thing that I really like to maybe try to study, I certainly do more of this, is kind of where strategies end up convening. So like, where are the like EMA cross buyers buying, where are the breakout buyers buying, where are the pullback buyers, all these different strategies that market participants use, and kind of where they converge, and almost kind of stacking them together to you sometimes layer conviction into holding a trade longer. That KPYL is one that I traded at that exact spot on 9/11 off the double inside days.
Right.
Right there.
Yeah, I mean, you cleared a base right there, and you're through the congestion, and it was a decent little trade for me.
That was a sweet one. So can you detail one more time the kind of some criteria of the slingshot?
All right, sure. So I'm looking basically for a stock that's shown positive momentum, right? You don't want something that's just in the biggest bear market of all time, and you get it'll trigger on a counter trend, short squeeze or something. You want something that actually has legitimate demand, but then you're looking at a pullback that. So let's say we're interested in this KVOIL right now, right? So I can see that it'll slingshot at like 40.76 or so, which also to your point about having convergence of different signals. We've got a high on in November that's kind of pivot high. We've got which corresponds really with the same point where that broke out here, and had a nice little breakout. So we've got multiple, and frankly, if you're the EMA guy, I think there's the 21 EMA is up there roughly the same range as well. What I'd be looking at is buying that. I'd be when it triggers, so you set the alert, and we'll see if it hits, and if it goes off, then I'll get a little notice as guys in TC 2000 know, and then you take a look how it's doing in the day. Did it and one of the things I like using the 10-minute chart. I feel like it really it carves in where exactly the real congestion points are. We drew it on the daily where that that slingshot line would be, but it's interesting. If we look at a 10-minute chart, we notice look, that line that's a significant support level. It tried to dip under, but it immediately popped back up. It did the same thing, the past couple of sessions. But then when it kind of gave way, the stock kind of flushed after that. So that's a pretty significant point. And it was a resistance level there too. So that's got me very interested in this, particularly what I'd call a pivot level right there. And so I'd be looking at. But if it trades through it, and a lot of it, if I'm just because it triggers doesn't mean I'm going to take the trade. If it gaps up to 41 and a half, I'm going to give it a second to see is this just a market maker game, or are there actually buyers coming in? So that's kind of some of the nuances of order entry, I guess.
Is it so? Okay, let's say are you watching this KPYL? I mean, pretty closely. If you get alert tomorrow, is it something that you're pretty interested in, or?
I wasn't until now. I mean, it's on my short list of stocks that I'll look at, and I've got a list. This is what I traded. I mean, so the box that might that I'd be looking at to get on my short list, right, or the list that would make it on my watch list. So it's an IPO, right? And like we were talking about the IPOs, it completely reset. I guess it's not an IPO anymore, but it's taken that maiden voyage where it's making its first new high after the reset. So that's something that I'm always interested in when you see something. This hasn't really shown the explosive move that some of the ones that I've been watching more closely, but it's certainly not a stock that I haven't traded. I've traded before. If it's the best thing that shows up in the morning, then yeah, I mean I would take this trade. But I set a lot of alerts, a lot of alarms, and kind of you got to take them in the order they come, right?
Hmm. Is that so okay, let's just curious. You say you set a lot of alerts. If you're, let's say you get three alerts on KVYO and a couple other stocks that might be interested in. What what are the next steps that you're
So we're looking at okay, which one are we going to take? And let's say the market conditions and everything, fits our profile, something we'd be willing to take risk on at that day. I'm looking, what am I most interested in? I should ideally have at least ranked them in my head where I know that I like this stock. I know how it trades, and if I've got a little familiarity with something, I'm more likely to take that. Um, I guess also, is it a stock that's, affordable? I might have there was one, what was it, CEG, I've got alert. I'm like, I don't know that I want to, on this. When the $300 stock can be great. I like trading Tesla. But this when they're thin, they're not so great because you can get, just playing the gap. You're putting I mean, there's quite a bit of slippage built into some of these. But yeah, this is one I'm certainly looking at. I would have liked it at the slingshot at 232 more than the 302, but
yeah.
Can't always get what you want.
CG's been a little tough one for me, man. I've been tracking this since the 920, the news with Microsoft and throughout Island, and I've taken a couple trades on this and just never been able to get any traction on it. Just didn't get.
It's too wide. It's wide and loose, right? So that's another consideration. Does it feel like it's going to be an explosive move, or is it going to be if it's wide? Here you've got that much. There's pivots in the midpoint. There's got a fill up there, got rejected, tried again, got rejected, and then gaps up. There's certainly a risk that it could fly back and fill this gap, or it could just take off. And to me, that's a higher risk trade. And something like, let's look at RBRK. I know that a lot of people are on this. I am too. Whereas I feel like this is going, once this, is able to close over 70 or push through 70. But, if you get a big move through there, I think this makes a little bit more sense than CEG, for example. I personally own this at like low in the base, but, certainly would be willing to add on to it.
Yeah, that spot last Friday when it kind of tapped below that earnings gap up low and closed back up, and then that was a really good spot on this.
Particularly since most of the other stocks were closing low, and I'm like, there's a little bit of relative strength here. I don't know how I feel about today. It looks like it's mid pivot, mid close. That if you zoom in, it made a push, and it wasn't really able to hold the, kind of fell into the close a little bit, which happened, but it happened after. I call these like when you get these spikes, kind of the Icarus level, the candle wax melts, and that's kind of where it struggled again. So I don't know. It's kind of no man's land for me right now.
Manrav in our group, who's also a student of Stockbees in the past, or maybe current. I'm not actually sure about that, but I know for sure in the past. He told me to ask about fish hook setup.
Fish hooks, okay. That's my that's an kind of an earnings setup, or I guess a gap up setup. So the thought is, if you're like, I don't know if you're familiar, but with it, what's it called, an episodic pivot, right? Yep. This is this change in a stock that it's gonna really change the whole structure of a stock. It goes from basically doing nothing to all of a sudden it's got some great earnings, and it's off to the races. It's completely changed everything about the stock. That's great. But the problem is once you hear about that term, you start thinking every earnings gap is going to be an episodic pivot, and so if you buy as soon as you get these news, oh my gosh, these earnings are great, they're going to go up forever, and then all of a sudden you find some institution just dumping on it, right, and you get faded. So I've learned the hard way that you can't just buy earnings gap. So I guess I was looking for a way, how do I get into a stock that I think is still going to be able to go higher um, after a gap up. And so, started looking at a lot and, of these stocks that are gap up, these best performing stocks of all time. And do you really have to buy that gap? And, I guess the short of the answer is no. You get an opportunity, if you don't buy the first day. What usually will happen is the next day, there'll be kind of the next 2 or 3 days, it usually happens relatively quickly, but there'll be kind of a test of that first day move. A lot of times it'll undercut, where a lot of the trading activity happened on that first day. Usually, I mean, for rule of thumb, you can, use it, people call it a high volume close or whatever, but the closing price, a lot of it happens, on the chart, and you can use that as kind of a pivot, to enter. So if it undercuts and then reclaims it, a lot of times they go over, and to my, eye, it kind of look like a fish hook, and so that's kind of where I guess called it. But we can look at, maybe Reddit had one. Yeah. Okay, so we had a push in Reddit, right? You make a first day, second day, and a push, and then it undercuts that, and then by the third day, or what is that? 1 day, two, so like 4 days, it reclaimed that, that first day, kind of high, cleared out all the, supply, and it was off to the races. I had owned Reddit going into earnings, otherwise I would have been buying there.
Where'd you get in? Where'd you get in before?
60s, low
Nice.
60s. Yeah.
Nice.
Hey, I have a question. TSR, I'm not sure if you mentioned this or asked him already because I got disconnected for a few minutes. But I was curious on your scanning process. What kind of scans you like to run?
Yeah. So I'm not scanning, I guess, religiously every day. I go through and make a list of, the stocks that are interest of me, and then they go. You can see I've got my of interest, list right here, and this is for whatever reason one of these stocks might have caught my eye. Maybe I'm looking at a theme. I've got a couple trend names in there, but I'll usually go through those first. I typically know, where any of those are trading on a particular, a day. Over weekends or, a couple times a month, I'll go more and do a deep dive. And I've got, right here on the bottom panel is every single stock that, all the whole universe. I'll go through, look at new IPOs. And you can do that on, like these, or, I'll look, are there anything that I'm interested in here? Zana, showed a little bit of power, so maybe I'm looking at this one. I did trade it like here, and I actually sold it pretty well because, again, I don't trust these. But and then the next step in the process is I'm going through the charts, I'm drawing my pivot lines and setting alerts. And if it's something that is signaling alert, then it goes on the big panel, or the interest if it's coming up. So you'll see, as I go through charts, like, I might not be interested. I might not have traded this in a while, but I still got my, kind of my thoughts and lines on that from when I put them on. And I don't know if that answered the question, but I've got other ways I can kind of sort my data. I can do, I've got so let's say we're looking, we're getting into earnings season and we want to see if there's a big move. We can do a search, like a kind of a standard deviations. Anything that's making like an abnormal size move, will show up. Unfortunately, we're not in earnings season, so we're not going to see a lot of those type of moves there. But you can sort it. Then one of the other things from I learned from StockView was this. It stands for modified double trouble, or so you're looking for stocks, and it gives you a metric. You can do it by 6 months, and I've got one for a quarter as well. But you can see what is the most momentum, pure momentum in the market, and it's a good way to look at the data. So you're going to find these are the stocks that have the most momentum, and honestly, most of them are going to be kind of junk high flyers, or kind of junk stocks like this type of stuff that have made moves and popped. But every once in a while you'll find a new stock coming up.
Are you willing to share that layout?
Yeah, I mean, I can post it out here, right? So I've got that, and I was playing, and I'll play around with other stuff. Like, and one of the things that I was doing, and you asked about 2022, is coming up with like, okay, what have whack-a-mole setup that I was thinking, okay, what are shorting setups? So things I wanted to be able to scan for and look for and check criteria off. But yeah, you can see I don't have all the boxes there in my hot list, what I would call, but I've got the ability to do like a slingshot. So I can see anything that's over the 4 EMA just by sorting the data that way. So it's not going to be,
Yep.
in that range.
Now, of the ones of interest, you set alerts. Are you coming into the day? Are you kind of just waiting for alert setup, or do you have like a list of maybe 4 to 6 or 10 to 12 or
Yeah,
what?
it's more the ones that I really want to see. Like, coming into the day, like, if you weren't looking at Tesla, you didn't, you weren't prepared for today, right? That was one of the stocks that you knew was going to be active. You knew it was going to be going to be hot. Like this is a stock that's Braze Inc. It's or what is it? Yeah, it's like some semiconductor. It's one that I feel is coming out of a bottom. I mean, if I look at it, I've got lines that I'm considering, maybe it's getting out of the base, but I'm certainly not, this is not on my hot list, right now. And it certainly wasn't something I'm going to buy today, even if it pushed over 46, I want to see that, the market being conducive, and there's certain stocks that are, that have been the leaders that are going to continue to be the leaders, that you want to see them acting well before you go to the next cut of stocks. And frankly, that's one of the reasons I didn't buy SMPC today. It just, yeah, I mean, I had alerted 68, but I you could see yesterday, like where everything gapped up and ran, and anybody chasing got punished. So I didn't quite trust it, and so
Yeah, man, that was a hell of a move on this today. Especially with the week closing. I mean, this closed at lows yesterday, and then just gapped up and just exploded.
yeah, and you just, I mean, it's in the base, so it's there's nothing wrong with it, but I mean, a lot of people like, oh, it closed low, so it's it's a broken stock or something, but it was certainly on my list, but are you going to go there? Or are you going to go something from Tesla, where I feel like that's kind of the stock that's made the big run. It's consolidating. It's going to tell us a lot more about the health of the market than one of these sub-tier names.
Yeah.
Because what's the analogy? Like when the police raid the whorehouse, even the piano player gets taken in. So it doesn't matter how I made that mistake very early, and a lot. When I was a younger trader, you'd find the last great stock or some new low liquidity stock that's looking great, and then the market gets some bad news, and you have no buyers, and you're kind of trapped in a lower liquid name.
Yeah. I mean, does that, I mean, you hear all this talk about, like leaders and, leaders and laggers, right?
Yeah.
What constitutes or what characteristics would you qualify for, I suppose for a leader or something like that?
I think I qualify it. It has to be what I call a liquid leader. In other words, it's the stocks that the institutions are going to be buying. I mean, if you're looking at pure price appreciation, I mean, is anyone going to say that Quantum Corp is a leader? GameStop's a leader. I mean, they're just not. They're not the institutional type names. But like Coinbase is probably the leader for like a crypto theme, I guess. You can say Microsoft's been kind of doing nothing, but I mean, let's Nvidia, is it? They call it Broadcom, or is it still Avago, or
it's Broadcom now?
Broadcom. Well, they changed the ticker, so
Yep.
whatever it is, this to me, this strikes as an institutional, quality leader, where you're getting 120 million trading this earnings gap, and which is holding. So if a stock like this can push, it's gonna your B and C names, which are going to move a lot faster. We need like one of these leading stocks to be able to show that it can hold up, and and bounce before you're going to move, lower on your list.
Yeah. Yeah. A couple of questions from some folks in the chat. Are you exclusively shares and equity, or do you dabble in option strategies or anything like that?
Very limited. I did a little options this year, but I typically don't. And part of this is coming from the options exchange where we did mock trading every day, and we saw how we had the edge that we would trade around and hedge off. It's hard for me to see that, directionally I'm going to take this. I'm like, well, I'm giving up so much, it's going to have to go up, $3 to get me in the money. And where's it, it's going to be, and, you get the Greeks working against you. And I don't know. I guess I haven't felt the need that I feel like options would be that helpful.
Yeah, I feel like maybe a lot of people, especially with the rules of accounts under 25,000.
Yeah.
And that changed with the T1 now, I believe, where equity settles the next day. I forgot about that. But before a lot of people got interested in options because you could trade with the cash account, and that all that money would be available the next day versus a pattern day trader rule.
Sure. No, that makes sense. I mean, I think when I had an account some 25 years ago that I treated futures for that very reason. You weren't bound by the pattern, day trading rule.
And the leverage, I believe, is what
Yeah, you can do. I mean, certainly if you hit an options trade that that you can work out really, really well. I mean, I did a few what I think I did like a kicker. Well, I think I referred to it as a kicker. I took a decent position in Rivian, like down here, and I think I had like, I don't know, a week out. I had like a 12 call as a I call it a kicker. So I had some options, in addition to the common. So I was just experimenting with that, but I don't really, it's certainly not a big part of my trading.
Very nice. And then in terms of scaling, maybe scaling in, scaling out, or all buy, all sell. What's generally the approach for that?
I've been much better at scaling out, and that's really one of the, I guess, kind of an improvement I've made in my trading, if you will. For the reason I feel like, it's better to take money off the board and sell into your pivot points or whatever. And so I'll give an example. At Tesla, we had this gap down and on, January 2nd, and I felt like, just for reference, here's where the daily was, right at where the arrow is, right? So we get this gap down, which is kind of an abnormal move for Tesla. And at that point, everyone's like, oh, it's going to go to the 50-day moving average. But I'm like, well, we've got to, it held this gap here, in early December. So that's a point I was really watching, and I was watching it fill out throughout the day. And so I wound up, buying it here with the the belief that, if it pushes this gap, I'm going to be looking at, taking risk off, into that kind of that 410, and then I took off the rest into, the kind of that 420. So I did scale it because if you look at it, you have to think, does the chart make sense? And if this, it took right here and made a V, recovery, does that make sense? That Tesla's going to, no, right? So it's gonna roll over, then it's gonna fill out, and then it's gonna, better, and eventually those pullbacks become shallower. I mean, that's how kind of the volatility comes out of the stock. That first move down is always the steepest, and then it kind of works it off, but it'll roll over. But so I trail a lot of, I've got out half of my Tesla today that I wound up putting back on, sold it 420, and and what I was looking at again, and why that was my area is I saw that we had this rejection, from what is it, the 6th, right at that level, roughly about the same price as yesterday's. I'm thinking, well, if we get there, I want to at least take some profit off, and then I'll keep the rest on to trail. So that's kind of where I'm at with Tesla. And I'd be looking at, for my next piece, if I'm going to roll it, we'll take it as high and we'll look at 450.
Yep. Hey, interesting thing about that low, right around 375. It's the election day anchored VWAP as well, literally right at that low. I'm not, don't know if you're into that, but again, kind of connecting strategies, kind of thing is, yeah, right at that low. It is where it held twice. And actually, another also interesting is that about 420 to 423 ish spot is the swing high anchored VWAP as well.
Interesting. Yeah.
Um, what in in what way do you kind of gauge the pulse of the market, or kind of hone your aggressive nature, when to push the gas, when to kind of step off? Like, what are some signals that you kind of look for or will take from the market in that sense?
Yeah, first, you're looking at generally how stocks are doing. Are they holding up? Are they going, blowing up? But I'm big on a couple breadth metrics that I use. I use let me just here. Um,
I saw you posting about this today.
yeah, I use the McClellan, and to me, like the T106, if you have the PC 2000, it's pretty good at spotting like the short-term bottom, short-term, like not necessarily the bottom or top of a move, but it's like, it'll put like a 1 day perhaps reversal if it gets to these kind of extreme levels. And one of the things that, we popped off that bottom pretty hard, and we're getting into overbought. So wouldn't surprise me if we get a little consolidation or not. But that's kind of a more of a short 1, 2, 3 day, signal where I'm going in tomorrow. So if we come in, so how example I use this, I'm not going to be buying, stocks that immediately as they break out. If they break out tomorrow, I feel like, risk is a little bit elevated for that. But if they tap off a support pivot, that's something I'm probably more interested in. But let's look at the other one is the NASI, which is the P2108, the summation index. One thing would so if you put just the summation, it's just you'll get the top chart, which doesn't, I frankly find that hard to read. This is something I got from, there's a guy in Stock Charts, the Picture of Power, and he had this like proprietary system, for headwinds, tailwinds, and all it is the NASI with the RSI on it. You take the
Yeah.
RSI of the top one. But what it really is these are more stronger moves from a kind of a swing perspective. This can last, these type of signals can last weeks as opposed to days. So it's like thinking of a blackjack with the decks in your favor, right? And that's, you want to, really push it when the deck's in your favor. So what I'm seeing right now is that, we've been pushed down, we got oversold, so we're building the decks up, it's becoming in our favor. And then you want to look like it did today is it curls off of that. And so that's something that, I think that it could be, a little bit of legs to this rally, and we're not looking at just a 1 day, move, but so we got a cross signal with the McClellan. So, maybe a little bit pull back before we find hopefully some support here. But I mean, it could always roll over again and, head back at least we're getting it. We have a tailwind here.
Yeah, I think my ideal situation is just like a little bit of chop to ease off a little bit, and then kind of reignite. That'd be my ideal situation, mostly because let me in a few more things, I suppose.
Yeah, I think that I think that's probably the most likely at this point. I mean, we got, look at like the the CNN fear index, because they use like, it's more scientific than I thought initially. I thought it was like kind of you ask the investors, but no, they incorporate the McClellan, they incorporate put and calls, they incorporate, a lot of that stuff. But we hit extreme fear this past on Monday.
Yeah.
And, so it was kind of like, okay, I see market at, kind of support lows, but are we really going to push it when we're already, there? I mean, the risk, as you were saying, though, is if we work off some of that, the excess and kind of go sideways, let's say we rally a little bit, that we get a weak, if we get a weak rally and we don't take out highs, we could easily roll over and then push lower. But as of kind of where we're at coming in this week, I felt like a crash was unlikely, maybe.
Yeah. managing your account or current trades, how do you generally like to size into them? Like fixed percentage of your account, or what other metrics do you use?
Yeah, no, that's a good question because I get that question pretty frequently. I do not use fixed, I guess, percentages. I mean, you can buy, like here, like Aqua, right? I mean, this thing is this is wild, and if you're putting, your normal percentage, in this, you're crazy. But I mean, I could easily, on Nvidia, you could put 100% of your account or 120%, 100, and you're not taking that much. You're taking far less risk than putting maybe 10% in Aqua, where it could. So one of the considerations is how liquid the stock really is. How well do I know it? Do I, I can build into gains, and if I have that, then I can certainly have bigger positions in certain names. I mean, I've gone Reddit upwards of 50%.
Yeah.
Which has its moments.
Will you frequently do that, and something that you view as a home run type of thing, go significant size, like talking
Yeah,
100.
when everything's lined up, absolutely. I mean, I guess in 2020, I guess maybe that Pinterest was my stock that I really felt that was kind of the one line that it was really lined up, and I had caught this move on like, I mean, I might have been on upwards of 100% on this one. I certainly was on full margin with everything, but I caught that move. Just kind of, like we were talking about kind of how things line up. We've got the show power. It takes out the, kind of the IPO levels,
Yeah.
biggest volume ever, and it's holding this gap throughout, so that's kind of why I was able to size it all the way through this next earnings gap.
Where do you play stops, or when do you determine that you're wrong? Will you frequently get in and out of like position, like let's even this pins back in 2020, or current trade that you've got maybe fair level of conviction on, and it's maybe pulling back against you 0.5%, 0.25%, 1%, whatever. Are you trading around a core? Are you kind of getting out, getting back in? What kind of that?
I'll get out and get out in, but I'm always setting the kind of the stop at the time I put in the trade in, and and this is one thing I've worked on really, a lot at, is try to improve my entries and exits. It makes your stop a lot easier, or you make your risk a lot easier if you've got a tight entry right out of consolidation. This is one of the reasons, I've switched to really focusing, so I use a program called TraderView, and it'll plot all your entries and exits on the charts, and you can look at it at different time frames. And if you're entering on a daily time frame, you're actually, you could be several percent away from an ideal consolidation point. Then you get lazy and you just say, I'm going to use the low of the day or something like that. But I've worked, it's kind of seen that. So now I'm looking at, let's find any example here. Let's look at Rubrik, right? Okay, so if I were buying it here, I'm looking at these consolidations on a kind of 10 minutes. So when you see these spikes up, still undercut, but that's telling me that there's still pressure. I cut those off. When I draw pivots, I don't really count those as the highs or the lows, because I don't feel like, there's a lot of, they're usually on the open when you see stuff like that. And it's market maker games. They just open it lower, they open it. But when you're entering a trade, let's say I thought this was going to go right here.
Yep.
And it goes, I'm looking at, my initial stop's going to be probably at 67.15. And, so I'd be out. This would have been a loss if I had bought there. If I bought it here through this pivot, I'm looking at 64.20, and it's, I'm taking these kind of like tighter, I guess, risks that I'm going to say, if it's going to work, it's not going to undercut it. If it does, it's not ready, and you have to wait for it to reset.
Will Are you willing to like quickly add? It kind of goes back to the scaling in question. Are you willing to quickly add to something like when like even that Tesla one off of 375? Are you going your full desired size right away, or are you maybe adding full and then kind of going overweight or something like
Well,
that?
that one I did. I do it different. It's not like I guess
Black
the
and white.
same way every time. I
Yeah.
mean, this is one I did add to. I didn't go very. I mean, I was under 10% equity on this one when it first took it up. In market conditions, it's kind of an unknown, but it was acting really well. So I took it up to maybe like 15, and then I sold a bit at 39 today.
Hmm.
Um, I feel kind of like, okay, let's take that off and see how it resets. And it's kind of like you envision the chart, right? Is it likely just to go like that? Or is
Yeah.
it more likely we're going to find some type of handle or pullback? I want to see how it pullbacks before. But if it resets, because I've taken a little bit here, I can put that back on and, lower the basis and all that stuff. And if it doesn't, I get stopped out, then, I'm out with my profit.
Yep. Absolutely. Brocco, anything you want to close with the final ask? I've got one more thing.
I guess just like the classic, final question of, what would be, your best advice as someone who's kind of up and coming in the markets and, sort of a beginner, I guess.
Yeah, I think put the work in. There's no shortage of people that are going to give advice on online, but does it really help you? I think you got to look at take a chart day by day. Find historical winners and say what you would have done. It's almost like film study for football or like sports, right? You go through the charts, and here we have the luxury, we know what the winner is, and we can go say and then think about what would you've done day by day on a particular chart. And I think there's really no substitute for that. And then you start forming rules based on that, and then you just optimize. And there's certainly highs and lows because you'll think you're on the right track, and it was a false signal, and you get your ass handed to you. But then how well if you're committed, you can get yourself up and keep putting the work in, you'll get there.
Very nice. Yeah, I agree. Nothing substitutes experience and trying and putting the pieces together for yourself. I can't count how many times, not just in trading, but but had to be taught the same lesson over and over again, or learn the hard way, so to speak. And looking back, just to put in the groundwork and get data. That's really going to stick with me, what you said earlier about asking yourself, does this work? It actually doesn't work. Is this something that should be looked at, and why? Or where's the evidence, kind of thing? And that to me inspires that curiosity, which motivates the work.
Mm-hmm.
Well, Scott, man, it was an absolute pleasure to meet you, to talk to you, and the feedback and interest from everyone here has just been astounding. Incredibly grateful for you taking the time out to
Yeah, absolutely.
teach us a lesson, man.
It was a pleasure. I enjoyed meeting you, man.
And hey, you wanna run it back sometime in at next year?
Yeah, right.
All right.